Good morning. Hi there. My name's David Seymour. I'm a VP here at Amber and I'd like to welcome you to our latest webinar and insights across the landscape of the UK market, destination market. It's a follow-up to our a previous webinar where we showcased our Amber Connect and we'll give you a little bit more information associated to that in a minute. We'd like to welcome all of our partners, operating partners, as well as investment partners, and also institutional partners as well. And also anybody that's not a partner, and anybody that is just interested in looking at various insights across the landscape as we see at the moment. We're very much looking forward to sharing some demographic data, booking behaviour, and also understanding a little bit more about the student experience and some feedback on that. And it's been a strange old year, challenging year. So far, but we've sort of been welcoming those challenges and taking them on. And it's more about the understanding and the triggers associated to see how we can develop and continue to perform well in the market. Before I go into some of the main bulk of the webinar, I'd just like to give you a little bit broad-based understanding about what we've been doing as a company as well. And obviously we launched the update of Amber Connect in our last webinar, and the adoption of the advanced analytics has been really, really strong for us. And we'd like to thank all of our partners that have adopted that, and the feedback we've been gaining from the likes of the revenue managers and the administrators, as well as the CEOs, CFOs taking a great interest in a lot of the data that we're supporting, as well as obviously the standardized marketing guys and leasing managers as well. In terms of our overall expansion as well, we've been fortunate enough to be able to go into a lot more destination countries this year, and also partner with a lot of institutions in destination countries as well as source countries, and we've expanded out into some new source countries. We are looking into about 120 different source countries at the moment. That's about 160 different nationalities as well. So we're getting a really good view on the global migration and how that can influence the UK market specifically, especially in the economic climate as we're seeing at the moment, the political landscape that we're seeing as well. So without any further ado, I'll look to sort of try to navigate my way through. So the first stage is I'm going to take you through some of the demographic data, and then I'm going to be handing over to Shrey, who will be going through some of the buying behaviors. But I'm going to attempt to share my screen now, so apologies if I get this wrong, but bear with me, caller, as they say. I will have a quick slurp of my coffee. Is that? I'm hoping this has worked. If not, I'm going to be talking to myself for about 10 minutes, which is nothing new, some would say. But anyway, hopefully you can see the screen, and we can crack on to the main course, I guess. As we go through, what I wanted to do first of all is just to frame and sort of set the scene. Obviously, the accommodation and housing provisions in the UK and pretty much globally for students is all dependent on how well the universities are doing, and sometimes the universities are reliant on the correct levels of policy and migration policies and how well international students are looked after as well, especially in the UK. So in terms of looking at the higher education applications and visa trends, we're obviously awaiting confirmation on specific application numbers that should come out next week. I think it's the 29th they come out. But the initial data that we've been gaining from the Home Office, as well as other sources, is that international students, the full-time undergraduate applications are actually down by 23%, and the postgrad international applications are down by 55%, which is probably no surprise to anybody. We were aware of this, and we sort of understand some of the reasons associated, the dependency restrictions, and also the proposed changes and restrictions to the international student journey made a lot of headlines in the source countries and put an awful lot of students off actually applying in the first place. One of the key things that we're looking at is not only how we can bounce back from that and how we can support within that. The visa applications are actually overall down by 40%. And probably what's more shocking than anything else is that the NROI reports that have just come out, and I'm not sure whether anybody has managed to catch up on those so far, but they're reporting a drop of 41% in international acceptances and deposits. And last month, NROI were working with 31 different universities, and they showed 10,000 less acceptances than previous years, and that's about 33% drop off. They're hoping for a pickup of those, but this is pointing towards not only applications down, but if the acceptances are down, what that's pointing towards is that there still is question marks. Even if they've applied, then the students may not want to accept, and they'll be looking. Our data is pointing towards them looking at other destination countries as well. So they're hedging their bets. And if you have, as an operator, if you have taken a lot of international student bookings in the first 3 months of the year, from when I say the first 3 months of the year, I'm talking November, December, January, even going into February, I would certainly be quite vigilant in terms of the risk of cancellation. So just make sure that they are definitely coming, and do all you can to make sure that you're de-risking your properties on that front. Obviously, there's a big reliance on international students. The tuition fees is evident, and a lot of universities at the moment now are pivoting and going after a lot more domestic students to make up for the shortfall, and hoping for a big landslide after A-level results to encourage a higher education for the domestics. The scary stat that I read was we're facing nearly 150,000 fewer international students than 21-22, which may be a bit of scaremongering, but it's actually the truth. We'll see sort of the Russell Group universities still being very strong, but the rankings play a massive part in how international students will select those universities as well. So we're seeing tier 2 and tier 3 universities really struggle and suffer, and actually going out a lot more proactively now in the marketplace to try to gain their own market share and fill their spaces up. That's the background, and obviously the knock-on effect is going into that student housing. And our statistics, and we're being very transparent with all of our figures here. These are driven out by our Amber Connect dashboard, which all of our key partners have advanced analytics and able to dig inside themselves as well. And we saw a very, very slow start into the UK bookings, and this is all international students and also UK bookings coming through. So we had a very slow start, and we were already pointed towards some of those immigration policies and proposed restrictions. We've seen very, very high increases in launch prices based on the buoyancy of last year, and a lot of operators being pretty punchy with their pricing. And we're also seeing the knock-on effect of the restrictions and dependents coming. That means the HMO market has got more availability, and again, that's probably taken a level of market share away from PBSA. We're expecting a very strong clearing and a positive trend going into August. We've seen some very strong upticks in July and August and September. I guess some of the good news associated with the piece on the political side is obviously with Labour coming in, you've got Bridget Phillipson that addressed the embassy education conference, and the delivery of the good news, which was highlighting that international students are very, very welcome, they're valued, and the journey will not be restricted. And she obviously has underscored the value of those students coming in for the overall economy and progressing and the higher education and wanting to sort of welcome international students to our shores, which is really strong news, really good news. It is too late for this year, we think, but we may see some late applications, or maybe it can change the acceptances. But it's a not knowing, but we'll continue to monitor and feedback on that. Just breaking down a couple of the source countries that we work with, and obviously UK domestic is a source country we work in. Again, we saw a very slow start. We're sort of down by 20% in the early part of the year. We were down by sort of by 75%. We've made up for that, and we're continuing to make up for that. A lot of operators have turned to us and asking us to concentrate on going out and getting domestic traffic for them. And actually, our domestic business has picked up to a point where we're May, June, July, August will be over year on year, will be over last year's figures. Sorry, tongue-tied. So we're seeing a big uptick in there, and that's obviously following the universities going out and getting more domestic traffic, and we're expecting a huge amount of traffic coming in around clearing as well. So we're preparing ourselves with that, and we're educating and supporting all of our partners in trying to gain as much market share for them as possible. India is obviously our one of our key source countries, and that's been hit massively by the application levels, reduced down in a lot of areas to about, reduced by about 40%. Interestingly, that we say we're only down 28%. It is quite a significant drop off. However, when you look at the application data coming in, we're probably punching above our weight in terms of our bookings. We've worked a lot on our internal efficiencies, which has allowed us to take on more traffic. We've actually got more traffic than previous years. It's been a slower conversion rate. The conversion rate's been good, but it's a slower conversion rate because there's more choice in the market, and there's a little bit more skepticism about whether they're definitely coming to the UK or not. But we have seen a big pickup coming through. It was still slow in May, sort of pick up in June. July is trending just above last July at the moment, and August is likely to be even more if we see more acceptances coming in from that India market. And the news coming out from sort of the Secretary of State for Education is a good news story, and that's penetrated through into that Indian market as well. And we're hoping that's penetrated into the Nigerian market. We haven't seen huge signs of that as yet. We did see a pickup in June, but we were trending in the first part of the year 65% down on Nigerian bookings. Mainly it was postgrads that were dropped off, and there were postgrads that would normally be coming with dependents as well. The expectation is probably to close at around 20% less than last year with Nigeria. We'll still make up some of the shortfall because obviously it is weighted to the end of the season last year as well, so we can make up for the shortfall in most cases there. A good news story is our other nationalities. The rest of the world has increased by 9%, and so we've been tracking and being more not aggressive as such, but we're positioning ourselves in a lot of new source countries and being more creating more presence in all of those areas. We've gone into China, although we've only been in China for, it feels like a number of weeks, to be fair, but we've become pretty relevant straight away. We missed the first bulk of the traditional Chinese period, but in the last sort of 2 months we've seen a good pickup, and we've got a team out there that's working really well and liaising incredibly well at the moment, and we're seeing a big pickup. There's probably more traffic that is looking towards Australia at the moment from China, but the UK, we have over exceeded all of our goals so far, which has been fantastic. We've seen South Korea, Malaysia and Thailand all pick up, and so we're trending way above what we were last year, and that's a good news story across the board. So we're making up for some of the shortfall in different other areas from our rest of the world piece. The next slide I'm looking at is the launch price comparison, and really, this isn't going to be any news to a lot of you, I'm sure. It was very, very aggressive coming out from a very strong season, 23-24. A lot of operators incredibly buoyant, a lot of revenue managers licking their lips, a lot of investors thinking great. We've seen huge increases in launch rates. Glasgow up 26%, which is incredible. Manchester was up over 15%. Leicester went up as well, quite significantly. London up nearly 8%, which is, with the rental prices there, is significant. The only drops that we've seen are in Sheffield and Leeds, for obvious reasons. We did see a pickup in Coventry, which is quite interesting. But we'll sort of look at this league table, and in some respects, we've seen the starting points very punchy. With a slower season, we've seen some of those original prices come down, and that's where we're sort of looking at the dynamic pricing from launch price to July. Last year, you can see on the left-hand side, the likes of Manchester went up 68% in studios and 75% in en suites. Really aggressive increases in dynamic pricing in Manchester last year. Same for Leeds, and also Birmingham went up 22% in en suites and 11% in studios. Newcastle up 30%. So we saw a trend of pricing really going up and up and up across the season. And getting to some would say ceiling points within that. And what we've seen, the knock-on effect of that, is the launch prices going into 24-25, which we've just shown. And we're seeing now a very different trend. We're seeing backtracking from a lot of operators and having to feel that they need to drop their prices. And interesting for me looking at this is usually we see a lot of incentives go in, and then there are incentives going in, and cashbacks and things like that. But and usually operators will rather put a cashback in to protect the rental, which in turn protects the valuation of the business and the properties. We're seeing wholesale drops in pricing, and operators really responding to the landscape, and knowing that there's more domestic students in destination now, they're having to cut their cloth accordingly, and sort of be more appealing to that marketplace. And that's an interesting factor. You're seeing all the sort of the red arrows, if you like, on the right hand side of the screen. There's a lot of reductions in price across the board, which is showing that there's more price sensitivity in the market. And looking at the price sensitivity, and we've just picked out two cities here and giving you some rental brackets of nationality, and actually we can see sort of China tends to have a higher bracket of pricing, which is shown here, but also China has become more price sensitive. If you look at the Nottingham figures here, China's got a similar proportion to India in terms of shopping in the 151 to 200 bracket, and so what you will see is more students being more price sensitive because there's more choice. Nottingham is an interesting one, where we're seeing they've dropped out of the top 100, so they're not gaining the amount of Chinese students going into the city. There's been, I think it's 2,300 new beds come into the space, into the market in the last 18 months, and there's another 5,000 beds due to be coming in the next 24 months as well. So Nottingham is looking like could be in trouble in terms of an oversupplied market, and again a reliance on how proactive that the University of Nottingham and Trent will be, and there may be just a different or a change in a different mix of demographic. And so operators, if you take note in terms of what students are buying and when they're buying and what price points, we'll cover some of that in Shrey's work a little bit later. Manchester's a slightly different case, where we're getting the starting prices were 15% higher. Yes, the University of Manchester has dropped down a few places in the last year. That hasn't really made a huge difference. What we're seeing in the market is that there's so much choice, and the price points we're starting. The application levels are still strong across Manchester, but the demographics are slightly different. We have seen, and judging from a lot of our institution partners and education agency partners, a lot of skepticism about students wanting to go to Manchester based on what they've read about housing crisis and will I be able to live in Manchester. Actually, the availability is now, and they've got good availability, so we're encouraging people to be booking as early as possible. So we have seen a demographic change across Manchester, and again, those students from certain nationalities are more price sensitive. So very prevalent. Obviously, you're seeing in India being more price sensitive than China, Nigeria very price sensitive. UK is as price sensitive as India. So this is sort of some of the things that we will be looking at, and working with our partners to be able to put in action plans to be able to ensure that the occupancy levels are high and you're getting the best return of investment that you can as an operator, at the same time having a bit of a moral compass with the students as well. That's probably you're probably bored with me by now. I do apologize, but I will pass you on to Shrey, who will be taking you through the demographic trends and student experience. One thing I did neglect to do at the top of the webinar is to highlight that if you have got any questions, please jot them in the Q&A note bit that you've got, and we'll try to get through as many of those as possible. If you want to drop us a note, and if you want to deep dive into any of your properties or any of your cities and surrounding areas, we're more than happy to do some consultancy work on that front and to do a deep dive based on our data, and also other third-party data points that we can pull in as well to give you a full understanding of what you could be doing as an operator in those areas, and also as an institution in those areas as well. We're here to help. But I'll pass you over to Shrey now, and thank you very much.
Thank you, David, and good morning, everyone. I hope it's still morning out there. My name is Shway, and I take care of the supply operations at Amber. Allow me to quickly share my screen and get going with this webinar. There we go. I hope you guys are able to see my screen now. Just before we start on with the demographics part, I'd like to take a step back and present the city level inquiry data and how we are trending compared to the last years. We will definitely correlate this with the application level data in a few days once the numbers are out. But a year-over-year comparison shows that London has seen the highest growth in terms of inquiry volume for us. Now, this is coming from both domestic and national kids. And with regard to Manchester, as stated by David, the students are still looking and not booking. We have seen a small uptake in overall inquiries, but the booking conversions are taking more time at this time of the year. Though after talking to some of the universities, we are expecting a very strong clearing this time of the year. Before getting into this section, I'll just like to remind everyone to drop in any questions in the Q&A section, and we will cross-reference all these things with our own data and get back to you shortly after the webinar. All right, coming to the cancellation assessment for this year, and I think this is an important one to manage for most of the properties. Falling from the Android reports showcasing a 41% drop in international acceptance and deposits, plus with our presence in multiple destination countries, we have seen that international students are hedging their bets by applying to more than one country, mainly USA and Australia, increasing the risk of cancellations, specifically by the kids who booked early in the cycle, like November, December, January, and partly February as well. Because of the proposed restrictions on international students that came just after this part. We are seeing China, Ghana, Ireland, and Nigeria as the source countries prone to highest cancellations. With some surveys and our inquiry data, we have seen students preferring living in cluster flats and sharing common amenities as long as they have private bathrooms there. We have not seen major deviations in room preferences except a slight shift away from studios to cluster flats. This is where we have seen a major change over the last few years. Devices used to book accommodations. Um, there, there is a stark increase in students booking accommodations through mobile phones, and it's extremely important for the properties to optimize their MWeb platforms for a good booking experience. This is a shift that we have noticed across countries at different levels, and it's much expected with the Gen Z. Last, we have analyzed the property reviews and tried to relate the rebooking happenings at a property with the reviews the students have. Based on the factors displayed in green on the screen on your right hand side, um, some these are the ones which are the major reasons that are leading a student to rebook a property, and the ones in red are the major reasons leading a student find an alternate accommodation. This obviously influences any new bookings as well, which is a major chunk, anyways, of any bookings. But after reviewing all the reviews that are coming via the students, these are the common factors that we feel influence this influences influences the satisfaction of a student staying in their property the most. Great. This brings us towards the end of our presentation. As mentioned before, my team has noted down all your queries, all your questions, and we'll get back to you guys shortly. But thanks everyone for joining in this webinar, and I hope you guys got some valuable feedbacks. Do let us know in case any of you guys wants us to deep dive into one of the properties, and we'll love to help you guys there. Thanks again for joining everyone. Have a good rest of the day. Bye bye.